Just looking at where we are on the Asia session, still we see a lot of positive risk-on reaction to what we've heard from China. How long-lasting is it, do you think?
Very long-lasting. This is momentous. We'll remember this day. We've been talking for the last couple of years when China would really deliver stimulus in style. And today they delivered something for everyone. It was a cocktail of stimulus. Most importantly, they really aggressively targeted the stock market. There's PBOC lending for funders and brokers to buy stocks. They're facilitating stock buybacks from listed companies. They're talking about a stabilization fund. But the point is, it's not just that in isolation. They've got something for the property sector. They've got something to ease mortgage rates. They've got something to ease consumer lending. They're helping M&A and to reignite animal spirits in the business sector. There is monetary easing across several different rates. This is really an incredibly comprehensive package. And it was surprising that it took markets a while to adjust just how big it is. And I guess that's because we've had several years of promises and not following through. And of course, even on this one as well, there will be some details that will be important to iron out the impact. But that's missing the point. This is the first time they've delivered across so many sectors at once, and they've already given some powerful details and some power measures. This is a really big turning point for the China market story.
China markets. What about the Chinese consumer?
That is the ultimate big question of how sustainable this. Does this change the China narrative? I think it's really important. I'm giving this really bullish spiel here. This does not bring us back to the China story of the mid-2000s. China's not growing at 8% again. It'll be wonderful if it can achieve consistently, above 4% in the years above. It's probably going to miss the 5% target this year. Still, above 4% growth is more than any other developed economy in the world, or at least most developed markets in the world. This is still very good growth. Will the consumer properly start spending again aggressively? It'll be a tough one, but they will start spending enough for the interim, and importantly, they're going to start putting money back into the stock market because the government has made clear they will support the stock market. And very importantly, they must make this work, so they will. It is still a state-directed economy, and they have said today they are going to make the stock market going higher, and consumers will listen to that message.
So the stock market, Mark, really quickly, let's talk about the housing market as well. We're talking about mortgage rates getting cut pretty substantially, down to 15% to 25% on that payment ratio. How much of a difference does that make?
It's not going to suddenly be a bull market in the property sector, but it's helping this whole bottoming process, which is a long-term process. It's a stabilization here. I no longer think the property sector is going to be a sufficient drag. It's already lost its importance, its weighting in the markets there. So if we stabilize that sector and we get a boost in investment in other sectors through the M&A mood, if we improve the mood of the consumer, and if we just create animal spirits again, then there is a bullish story here, even though property sector is not suddenly a bull market itself.